Hello, hello, hello. Happy Thursday, Unemployment Thursday. How's everyone doing today? Thank you, Sterling, for putting in all the news so far. Good morning. Good morning to you. We have the ADP report. I think it's the lowest since also 2021. That's the thing that jumped out to me. I don't normally pay much attention to ADP, but the fact that it's now dropping below 2021 levels is very, I think that things are falling off a cliff pretty rapidly, and we need the recession. We definitely need the recession. I literally want to know, and if you were in charge, how would, and you're president, how would you bring prices down? How would you do it? I mean, without causing a recession. Think about it. I mean, you got to get some of this money. Fed's got to keep tightening its balance sheet. You got to get some of this excess money still sloshing around. How would you do it? Think about that one, because it's tough to get out of this situation that we shouldn't be in. Well, they want us in because they want this inflation. Remember, we were running 1.8% or something, and they wanted above 2, and how'd that end up? Boy. What else do we have today? What else? What else? Let's see. We have Donald Trump leading. We have, where was it? Really, I saw that Trump to adopt Elon Musk's proposal for a government efficiency commission. So let's expand government to what? To make it more efficient? Can't we? All right, you don't need a whole commission for that. There's a bunch of stuff you can get rid of right off the bat. What else? Good morning, Royal Palms. Very quiet day today. Not a lot of people tuning in. Oh, well, if you're in here, say hi. So we had the ADP employment numbers coming out at 99K. Missing, and that was the lowest since sometime in 2021. Initial jobless claims coming in line roughly. Continuing jobless claims coming in a little better. Non-farm productivity bouncing. Labor costs contracting. So more productive for less money. So those were very interesting. Now, the big thing today I'm really focused on is these 10 a.m. numbers. The services. Minor is 945, so don't ignore it because it's also the S&P Global Services, which they're still expected to be pretty modest expansion. Remember, everything above 50 is in expansion, and the numbers are expected to come in around 54 to 55 for composite and services. But pay attention to these ISM numbers. That's closer to 50. Especially if business activity drops at all. Watch unemployment to see if that drops below 50, because everything's focused on employment right now, and we have non-farm payrolls tomorrow. New orders and prices. Prices are still expected to be elevated. So if this holds up, remember we had the ISM manufacturing pretty strong bounce in those prices. Let's see if that carries through to the ISM numbers, and let's see if the new orders are contracting or not. So this is the one that could really cause some potential volatility today. We got the crude numbers. Remember, because of the holiday on Monday, crude numbers weren't yesterday. They are today. Crude looking to try to find some support in the short term. We got some bill auctions. And then tomorrow morning, non-farm payrolls, the last non-farm payrolls before the Fed meeting. In terms of the market map today, let's just do a quick refresh. You got Tesla. You got the full self-driving China pump again. Seems to be rehashed many times. You got Amazon up a bit today. But the chips with Broadcom, AVGO releasing after the close. So pay attention to that. And I think we've hit the peak AI. So for me, and we had the AI earnings yesterday, which were not good. So in terms of groups, Again, we'll refresh this one more time. We have energy, consumer cyclical utilities leading, technology and healthcare and comm services lagging. Again, energy I'm watching, especially, it's going to still depend on those EIA numbers coming out today, but it's trying to hold some very short-term support. We're nearly back to 50-50 of the 25 versus 50 basis rate cut going into 13 days from now. So a toss-up. Fear and greed index is still at the upper end of neutral. Good morning, Anissa. Good morning, Ted. Good morning, AS. Dance unites nations better than presidents. Dance a little from time to time, just wanted to spread some positivity. Well, you know what? Dance is a good thing. So you think you could, you sound like they used to do that thing for so you think you could dance. Remember they used to have those dance, unity dance things, especially around this country, but I think it went worldwide at some point. You know what? We just need to have some more positivity in this world. All right, in terms of earnings, really pay attention. We had NIO, Sterling put that in the chat. Revenue did miss though, but it is up on better than expected, but it did miss on revenue. Pay attention again. Broadcom, miners, DocuSign. Tomorrow, really the only thing worth noting is Big Lots because of their potential bankruptcy. All right, so here's exactly what I'm paying attention to going into the ISM numbers. If we start trading towards yesterday's lows, my minor level I'm going is about 54.65. And if we have some disaster, it's 5400 to 53.95. But that would take some disaster. Now to the upside, if we get a little bounce, we're getting into daily cycle bottoms, but we're now getting into weekly cycle tops. So even if we get a bounce, I'll be watching for rollover play, which could put some downward pressure. Now, from an S&P perspective, I am watching going into the open this 55.40. We start getting above there. My targets are yesterday's high area around 55.60 to 55.65. Now, if for some reason it does get into more bullish mode and it can get a close above 55.65, which I'm not expecting, but doesn't matter what I'm expecting because that could lead to a %B buy set up for just a bounce. We are against the 50 EMA. So that's exactly what I'm watching. And that would also take us below or back above the prior support level that was violated on Tuesday. So that's what I'm watching for. Other than that, if we do sell off, yesterday's lows are very key. Yesterday's lows to about 55.03, and yesterday's lows are 55.0675. So this is a little key support zone. When we start breaking that with momentum, it's going down that 54.65 area from my perspective. Hope that helps. NASDAQ. Paying attention, we have right here, not a double bot. It's a little sloppy. I mean, you can, because we have multiple spikes down there, but it's really then trading off of yesterday's highs for a bounce play. So it's not the same kind of setup as the S&P necessarily, but that could take it. It's a nice little bounce play back to potentially 19.4. But you need the follow through close above 19.114.75, so 19.115. All right, and that would also be a %B buy, but it is against that rotation zone now. So that one is still has to be managed closely if it were to trigger. Again, not trading or financial advice. Something I'm keeping an eye on here. That's your only bounce setups. If we do start breaking below yesterday's lows, the 50% retracement from the rebound from August 5th lows is 18,688. Another key support area right in here you still have right around 18,556, and then major is back in the 200 area, and the 62.5 are on 18,350 to 18,353. The Dow, keeping an eye again on there won't. Yeah, there is a potential. No, there's not. Yes, there is. Sorry. There would be a potential percent B buy above yesterday's high, but it has to follow through with a close. I'm paying attention to yesterday's high and low. That is key for me, from my perspective. In the Dow, the Russell, yesterday's low was very key for that, and then the 50% retracement is 21.21. I guess if it could manage above yesterday's high, it would be a percent B buy. Remember, we completed that sloppy double. So that's really about it in the Russell. VIX, if we start dropping below yesterday's lows and trigger, especially that S&P gets above that little shelf here, now we could really end up in choppier mode. That's why if we do get above this shelf, it's not for granted that it's just going to take off. If the VIX starts collapsing, or if we get something very positive for the ISM numbers and the VIX starts dropping, then I'll pay closer attention to, especially if we get some downside momentum below yesterday's low. Other than that, if there's nothing shocking with the ISM numbers, then we could end up with a choppier day, because everything's going to depend on non-farm payrolls tomorrow. Notes. Here's the futures. Looks like it's posed to break out still from the 87.5 rule, which has not been violated. We're still at a magnet price of 115.18.5. Then to take it into the possible very toppy area from April of 23. The only thing that would put a kibosh on that is if it closed back below 112.16.5. In terms of the yields,
Sorry, could you say?
No, I can't say that. I said yields. 34.67 is still the magnet price now with the yields. 3.467 is still the magnet price to take it into those April of 23 lows area. Looks like it wants to break down so far, holding the weekly and the daily rotation zones. All right, 10-2s, still just slowly climbing higher. Dollar index has not broken below the 62.5. I'm still watching that. The needs a lot of momentum to get back above the high. I'm still watching from Tuesday. So overall, I'm still watching. The only thing that gets me bullish is if we really double bottom down here at key support and then trigger it for a bounce play. That's it, because it's got some heavy lifting to still do. But I am still keeping an eye on for a bottom pattern. We need a stronger one at this point. Crude, as I talked about before, trying to hold a little bottom. Could get in for a pop above 70, but the target is that 70, 75 to 71 area in the short term. Other than that, the only more sustained bullish thing is if it fall through with a close above yesterday's high. Not expecting that. We are getting to cycle bottoms on that. Gold popping back up. So still holding the rotation zone. By the way, gold set up with a yesterday's high became key because it was in the percent B buy area. All right, we broke above it. So now a sustained close above yesterday's high. This had to be traded intraday so far, but a sustained close would be for a percent B buy and potentially take out the most recent highs. I see your thing, Royal Palms. We'll take a look at it in a minute. Silver, a little bounce here, but the overall double still in play. Silver had a little percent B buy also. Silver had a little percent B buy and a little mini double bottom. that was triggered yesterday. So paying attention to a short-term little bounce in there. What else? Keep an eye on this, the yen. It's held the rotation zone. It's still in potential weekly double bottom territory. Watch out though in the markets. If the yen keeps strengthening and takes out Monday the 5th's lows, we could see a lot more downwards pressure on the U.S. stock market. It'll put some of these carry trades back in a little more jeopardy. So I'm paying attention to that if that breaks also. Let me just knock a couple other things. NVIDIA, still no technical close below the 62.5. It's looking to gap down today. Remember, the magnet price for me is right around this 90 area and retesting the lows from April 5th. And then we have a potential massive double top. Why am I bringing that up especially? Because we have Broadcom. Broadcom, on any earnings miss, 134 is my target price on the downside. Even though we haven't closed below 62.5, that's the key price with sort of AI stuff more and more in chips starting to fall apart. Let's see. Royal Palms on a DKNG. Clean up the chart a bit. Let's still holding below the weekly rotation zone. 50%. So, I mean, this, in order for me to look at it on the bullish side, it would have to get back above 36.63 without some kind of bounce play coming right now, because that's going to be very key resistance. It was trying to be support, broke down, turning into very key resistance. And then the target for me would be 39, at least from a trailing perspective. That's the 200 and the 50% retracement. So, is it a super long-term bull move here? Not really. You had the double on the shorter term basis, which is already played out, whether you use conservative or aggressive targets. So that's already played out. That was the trade before, taking you back to the key prior support becoming resistance area. Now it's virtually in no man's land. On the downside pressure also, remember you still have the rotation zone against it, which is on the weekly, which is coming in roughly in line with those daily highs I pointed out. So I would be careful from the bullish side unless it can sustain something and follow through with a bullish close above this mid 36 level. Other than that, if it trades back down, I'd watch for, it could set up eventually a potential double bottom. So a US dollar drop in service. I don't understand what you mean drop in service. When the ISM service numbers come out, we still, with the dollar index, we still have the trend being down in the short term. So it's still following the rotation zone down. Now, if you mean, is the US dollar going to drop in like reserve currency, that's a whole different discussion. That's whole different, and it's not going to drop from that in the short term. Long term, it's losing something, but again, there's a lot that has to happen before the dollar loses or anywhere gets close to losing reserve status. In the short term, based off the ISM numbers, if they're worse than expected, yes, the dollar will drop. There's no guarantees, but that would be based off the technicals and the fundamentals where it will lead to. Good morning, Richard. All right. That's really about it. Peeking into the S&P. Remember, 945 are your minor numbers. The S&P Global Services and Composite. And those 10 a.m. numbers are going to be key today. So do not ignore the 10 a.m. potential volatility. And I would glance at them, especially the subcomponents. Don't just look at the headline numbers. With that, I shall talk to everyone tomorrow after non-farm payrolls comes out, and we'll see how what Broadcom did and what, especially what non-farm payrolls did, whether it bounces back. I'm expecting. Remember, it was 4.3 last month. I expect it to improve slightly, maybe closer to 4.1 in the short term. That's not to saying longer term payrolls are going to improve. I think then they're going to deteriorate again. But we could get a little bounce in them based off some things that affected the June payrolls that came out in July in the short term. So that's where we sit. I shall talk to everyone later. Have a wonderful trading day. Bye for now.